TA and FA, fundamental and technical analysis. TA is technical analysis, while FA is fundamental analysis. How they operate in our markets, and not only our markets, in bond, in commodity, so in gold we can use TA and fundamental also. But in our markets, we want to look at what has happened in Nigeria stock market. This is where we are concentrating, not on foreign market, but our foreign market has influence in our market direct, not just before we are saying, oh, because they are far. No, what happened in US today, this morning, will affect Nigeria market as it opened. Because in the night when we are sleeping, they are busy in the market because we are asleep, they are awake, and they get the information for before the day break. And that means if your market closed this night, the guy in US will say, oh, this. In the morning, because the guy has a broker that is presenting in Nigeria, he don't wait to say, see what is opportunity to buy you. He tell the guy, buy me this stock straight from you, because the guy has the technical tools to analyze. But here we are still looking at fundamental. All of us are looking at fundamental. But the guy has the technical tools, and it's not just that, because he's going to stay in that stock just for like highest 2 months, 3 months out of the stock. That means if you want to be a really smart money maker in the market, you need to have to combine these two analysis together. The dynamics of today trading on the floor of Nigeria Stock Exchange. That's from our topic for this training. We want to bring out this, what has happened in the market that has made the market to change. In 2008, we're all doing the same thing, but now, not the same thing as 2008 we are doing today, because the market has moved to another direction. And what brought about the direction? The reforms and the transformation in the nation capital market, and after the major crash in 2008 to 2011, that were induced by global meltdown, systematic problem in the financial sector. We know when Sanusi came on board, what he did. The market was coming down gradually in 2008, but when he came on board, they make our financial sector look stupid, and like everybody there are rogue, they are all thieves. That really pushed our market further down. But now I think he also, I will say some kudos to him on another aspect. Since he came, we were able to position our market, our financial sector good to that. Today we can boast that Nigeria financial institution is among the 1,000 ranked international bank today. Just because of his effort. So that means he has fighted the market one way, he also have supported the market. When we believe that the guy is anti-capital market, all the activities we talk to you on the media, anti-capital market, because he don't like that market, because the guy is not in that market. He hates people making money from that aspect. Yeah, he was MD before, but he don't like capital market. If he like capital, he won't be all kind of comment he make when he goes to a party, when he goes to a lecture, he will make such comment, because that comment will go a long way to affect the market. Like I would say, if Bernanke make any statement in US, it will turn the economy. That man will now be conscious what to say if outside. But like Sanusi, even though it's a birthday party, they interview him, I want him to say about capital market. Even though it's lecturing in secondary school, either birthday, secondary school anniversary, he must say something about capital market. That tells you that the guys anti-capital market, they don't have interest in the market. Let's move on. The transformation in the market and the economy open our markets to a lot of portfolio and direct international foreign investors. But most time, I don't really call them foreign investors, because they are most Nigerians that are abroad. Because they have pool of funds, and those guys there are matured man, so they have good research team. You don't use them to, they're not really foreign, but fine, they are mixed, but most of them are Nigerians that has cash at hand. The opening of our markets to the Nigerian world, the inflows of investors who use high frequent trading, ignore use of both technical analysis and fundamental analysis, making what decision that will really impact their life. The major changes in our market are these. Changes of NSE guide. We know when Oscar came on board, the guy brought a lot of ideas from the US market, because that is where he was trading before he was made the DG. When he came, our market was having 33 subsectors, which is also a problem for foreigners to come in, because they don't know who sector to go in, because all of them are there. But when he came, he now patterned our market to international direction. International to that. Even though you are in UK, you are in US, the same pattern, international market structure, that is where our market structure. That is why today, you see them, they come in direct, because this place is almost like their market, because everything is working together. That's why we have just 12 subsectors in our market, because it suits their own aspect of the market. Now, looking at now, we now move on to introduction of indices for easy analysis. Before in our market, we only have all share index for everything. But when he came, they introduced NSE 30, they introduce NSE 50, they introduce industrial, or just to suit also, because in the US we have S&P, we have Dow Jones, but those, they are not only stock there, but in US they have about 12,000 listed equity. But those 500 are the ones that they say, oh, these are liquid. They're like, we say our NSE 30. Some people that they don't trade any other stock, probably in NSE 30, that's what they trade in our market today. We know that those stocks are highly capitalized and there's float in them and they can make money from such stocks. Then also in technical analysis, there are some stocks that you can't trade with technical analysis. There are some stocks you cannot trade because when the stock is the price is low and the volume is that, we don't need to look at such. But all those blue chip stocks, you can trade them with technical analysis. Introduce exchange traded fund, market making, short selling and security trading. Then zero tolerance on release of information. I think they really work on it. When he came, he gave companies 45 days after your audited result to release your result. That means after 45 days, you start paying fine to NSE. In Nigeria before, like stock like 7up. 7up has its financial year in March, but we only released the result in September, October before now. But now they're off, key to obey the rule. That means that the guy has enforced this zero tolerance, they'll still be giving us first quarter result in December. Highest, they don't know how to talk to them. But now, if you fail to release your result after 45 days of your quarter result, you have to pay fine. Why full year? You have 90 days, 30 months for you to do your auditing and all the stuff. But quarter result is just like management result. This quarterly result is just like management account. You don't need to go more or less people that are going to pay interim dividend like GTB, Access. They have to do normal auditing account. That is why they will take like August or after August before they talk, because they're going to do due diligence on their result because they're going to pay dividend to investor. Increase of circuit breaker from 5 to 10%. This is another thing that really changed the face of our market. Before, people are investing for long term, but when they see this opportunity of they can make 10% in a day, which is also dangerous to the market. You can lose 10%, but if you can calculate very well and invest wisely, if you can get 10% in 2 days, that is just 20% for you. But there's some market that in a year, you only return that 20%. That means that market 2 days alone, you can make 20%. That means if you are careful enough, in a week, if you are calculating that, oh, this week I want to make 10%. That means in a month, you are hitting 40%. Before, it's not like that. That means this circuit are bought. Also, if you can lose 10% today, before you can go back to that percent, you have to gain another 20%. That means you have to very, very work careful and also you have to work very hard. These are the dangers in also such tools too. Introduction of new trading platform, which we all know. Introduction of index circuit, which was the last thing they did about last week. That this all-share index, that there's a limit in a day that it cannot lose more than 5%. Intraday, that when such thing happen, either they short the market for 30 minutes or they short the market for that was the latest one they are just introduced. Introduction of bond trading platform and market makers. Before our bond is just for the big boys, the banks. But now when he came, we were able to introduce that you can trade bond on the floor. Which you can see that about 30 bonds can be traded on the floor. And you see them every day. When market is going on, they can buy them on the floor, you can sell them on the floor. That is a good thing for the market. That means our market is being moved from one direction, equity alone, to bond on another level. We have an exchange traded fund. The second one, the next one there is introduction of over-the-counter trading of unlisted equity, which was done on the 1st of July. That means total that are not listed yet, you can trade them. Especially people that are bought into all those private placements for a long time, they are just holding certificates. Then you can still go to approach where it's a medium that you can just sell and but it might not be liquid now because we cannot recommend such stock for any new investment because we don't have history of such company because they are not quoted. Once the company is quoted, it's exposed to the world, then due diligence is done on their result and the company become more transparent in all they are doing. But when it's not listed, I don't know what is happening in the company because they are not giving me quarter result on due time because it's not compulsory because they are not listed. But if you are listed, it's that every post-listing requirement must be met by whichever company that is being run by anybody. Then another one is the inflow of fund managers. This area that really helped our market. When he came in, lots of companies can see that today, South African companies are buying up Nigeria stockbroking firm to acquire them just to co-present in Nigeria. I know about 3 stockbroking firms that were being bought by South Africa company and one in England too. That means they have interest in our market, and before that, they are not coming to play with us in this market because they know that it's an emerging market that is coming up. After collecting their loan from there at almost zero rate, they come here, just invest in 2 days, they are making 20%. They can easily pay their loan. That means money. That is why when the bank say, "Oh, we want to withdraw the quantitative easing we are doing, stimulus," everybody was panicking. Let's sell and get our money back. But when you say on Thursday, it will be a gradual process again. But one thing that happened that after I made that statement, governors of each state in America started to know it's not possible that I want to do that. But that is why the market in US had to come back after the thing has died for like a week. But when all those governors in different states say no, it's going to be a gradual process, I think that the market starts taking up the right direction again. But this is just an update of how our market has performed this year. But I think if we just look at it, today, Nigerian stock market occupied the 4th position among the top performing global markets with almost 35%. As at on Friday, the market is about 33%. Before the market crash, when he hit 40, we have almost at 35%. This reflection of improved confidence from domestic and foreign investors. Although you know that foreign investors, they are not like confident, they want to make money in this country because they made money before. They see that there's opportunity for them to make. That's why they're here. But domestic investors, fine, it's good that they're coming back. Any market that's being run by foreigners or have more holding, that market can always crash at it because when they pull out their fund, the market will go down. But now that we have pension fund in Nigeria, domestic investors come in, that means their fund in the market might not be much. So that anytime they fund their fund, our market will not crash the way it did in 2008. That means we still have some things working for us now as we are coming back gradually. But what the beauty that in 2008, when I look at the history, they don't have about 17% of our market in 2008. But when they sold that 2008, they see that the market share. But now they have almost 41. We have to be very careful too. Because before 2007, they don't have about 2008 about 17%. But now having about 41, we have to really sit up to really watch them because then now they tell where the market is going. With the low interest rate and the yield in developed markets, funds have been channeled into emerging markets and frontier markets, regardless of the risk associated due to high bond and yield and equity return. Despite that, there is risk in our market, they prefer it because they know that they will make good return. Because over there, what is their bond yield? What is their return there? But here in Africa, I think they can still make good money. Overall market view. Our overall market view formulates what percentage of your portfolio goes allocated into a stock versus cash at any given time. That means we have deciding factors here. In the general market, if you're analyzing, the fundamental we are using there is the economic periods, which sector with the economy, which circle, what area with the economy. Another one is historical valuation. But general market, we want to use either the market is at overbought, oversold region, which have used the technical analysis to give you the broader view and the smaller view. Time models, which I have also explained, the trend analysis, which Mr. Wag has handled, for you to understand the general view of the market. This is what we are showing now. Then another one is sentiment. We want to know the volume. As we have said that when market is going and volume is dropping, what is our sentiment? Which also, technical analysis will also reflect. We have analyst sentiment. When analysts in ProShare recommend, analysts in Invest Data recommend one particular stock, you see that every investor want to look toward that particular because it's coming from different, and that is more of sentiment because they are ready to one particular stock. Also, it is an investor. When investor tell an investor, oh, this stock is good, this stock is good, this stock is good, see, they want to look toward that stock. All that can also is part of sentiment. Asset class view. Here is more of want to trade both bond, want to trade equity, want to trade even money market. But our factors in selecting this kind of portfolio is you want to know what the fundamental is, the rate, growth return. What is your rate? What is it going to get at the end of the day? Is the return high or low? Your valuation, what is the risk level there? What is your yield in such investment? But also you can take analysis, your gain and your loss line. You should consider them when you are doing your asset class view. Timing model is very important in asset class view at the same time. But remember this global sentiment of global comparison. You want to compare what is the yield in US and the yield in Nigeria. What is the yield in UK, in South Africa for either you are going to buy bond or going to buy equity. It's also going to control the volume involved. The contraction, you have the late contraction. before we go from here, which stage of our economy are we now in this economic cycle? Let me just give you an idea. In an economy, we have this 5 seconds an economy. From what we are seeing now, what is happening in Nigeria today, which stage of the economy are we?
Stock market.
Yeah, in the economy and the stock market, which stage are we here?
No, the economy is like.
Okay, let's look at the economy now.
The economy.
Yeah.
The economy should be in late expansion.
Late.
Expansion because the stock market is mainly contraction.
Okay. Another person. Why at this period? I would say we are at late contraction for economic wise. Let me give you an example. Look at our interest rate. Look at our inflation. Look at our production capacity. Manufacturing is being affected by interest rate. For that, we are not moving ahead. We are still looking down in terms of production. It's only the smart industry that we can see that they are still making move.
Actually, I think our production capacity is going up.
No.
Manufacturing is being built right now.
The cost of running, the not even running a factory in Nigeria is cutting because of what? This first, you get the gist as to go. Yes. Since our production capacity is dropping, inflation is high, our interest is high, we are at the late contraction stage of our economy. Why? At this point, everything is like moving in one direction. The interest rate is high. Why the inflation is high? And when interest is high, what is the cost of fund? If interest is high, can a businessman borrow easily from the bank? Then will the man business expand or contract? Uh-huh. Then we'll now come to the market. Yes, we're not coming to the market. Now, in early expansion of any economy, healthcare, ITC, technology, transport sector will always boom. Yeah. But now coming now, I think coming back to go on. Then in the middle expansion, capital goods. When I mean capital goods, we need all those companies that have heavy, intensive capital to run their companies. Then at the late expansion, oil, gas, energy, basic materials, and consumable staples are also booming. But in late contraction, agriculture, utility, and consumer staples will also be there. Yeah, the early contraction. Why the late contraction is where, no matter what it is, because of money must exchange hand. This stage we are now in this economy, our financial sector is up, consumption is up, while construction is also up. Why? Because we have a little gap in our infrastructure, and because we want to bridge that gap, that's that even government have interest in infrastructure today. Individual foreigners are coming to even to put fund in our construction because they see that there is a gap there and they can make full of return in that sector. That is where fund is going. And that's the way our cement construction company is moving. Look at what Julius Berger is doing today. Julius Berger, before we mention any contract in Nigeria by federal government, they have about 50% of federal government contract. When was that the price on the technical analysis that it's going up? I don't laugh. I know that stock will still move above 100 naira. Why? Because they have a lot of things they are doing and profit is coming. Private sector is giving them to build house for them. Government is giving them. That means they are all over because there is gap in infrastructure because population is going while there is no accommodation. People are building and even road to use. Number of cars are increasing. No, that means they will have a lot of business to do. Also, you look at Dangote cement. I heard that we will soon be exporting cement out of this country. But we need to satisfy the need of this country alone. Even Dangote is producing for Nigeria alone. All both CCNN, Ashaka is producing for this country. The country will swallow it because we need cement now. Okay, last time I heard that Lagos State government is having one MOU with WAPCO that they're using their cement for particular roads in Lagos. That means on that one, WAPCO has sale for that product already. They don't need to go and be looking for market for it. Because they say that anything Lagos State want to do, they are going to buy from WAPCO. Who I know that Dangote also can equally do the same thing because Dangote is also giving to people. It can also approach other states. Good, other states. That means these people have market already, and this is where is booming in our economy. This our healthcare. This healthcare that he said, I mean, healthcare at this point in the economy is also booming. But because it's a component whether the economy is expanding, the economy is in depression, there must be what healthcare needs. Because people fall sick, old people become, the number of people that join old age become more, and you know, see, more children are coming in. That means any product in this healthcare will always sell. No matter the economy is contracting or the economy is, that is why at this early stage it's still there, but here it's still there, it's still at this stage. That means now, as an investor, which sector do you target in the market?
You have to know the stage you're in.
Because you know the stage we are in now, then which sector do you target? I say we are in late contraction at our economy, then which stock will you target at this point?
Personally, I know that I have to target construction.
Fine, good. Yeah. Your target is construction. Madam, what are you targeting? Good, because whether there is boom or there is, then people must eat. That means these sectors will always. That is why today Nestle can move from 400 to 1,000. When market was up in 2008, Nestle do not hit 400 naira. The highest it got that year was 380 naira, and now came down to 120. I remember that on the radio I was shouting, buy Nestle at 120. One man that sold his house, I can remember that one. He sold 2 houses. He bought Nestle at 120. He sold Nestle at 400. The day the man drove one jeep to my office, he said, Ambrose, you and your guy, then we are still on the radio. Your best chance to buy, and I bought. I said, how many? He said, I sold all my, but now I have 4 houses. I said, sure. So what happened? He said, I only put my money in Nestle. And he collected dividend between that period. They have collected bonus between that because they gave dividend that period. Within that period, they gave bonus. Now the man said he has exited the market at 400, but other people have entered at 400. Now they have this thing is at 1,000. That is that such stock will always go up. But another thing that will tell you why the stock will go up like that, we will do that one just briefly. The institutional holding of any company has impact on any share. Like we mentioned about free flow when he was teaching. That free flow is very important in your investment. You know, as a good investor, if you are taking stock to buy, all you do look at this stock, you go down, what is the float of this stock? When the float is small, I said, when market is going up, it will support the price of that stock. What supported Cadbury? Cadbury moved from 9 naira first to 35 naira. He stayed at 35 naira for a while. But when the boom came to the market in May, that we said normally it would be sell off and go and rest. When the boom came to that market, it moved Cadbury to almost 66 naira because we have 25% of Cadbury share as outside. Cadbury, the institutional investor that has Cadbury has 75% of Cadbury, and they are not ready to sell. They are not trading. Their own is at the end of the year, give me the dividend and now send it back to my country, and let's run the company well. And also, if foreigners are taking investment decision, they want to buy stock where they know that they have good corporate governance. And any company that white is being run in this country, I'm sure that they have good corporate governance. That is why if they are coming to buy, they will buy Nigeria Brewery. They will buy. So they're buying small stock. No, they buy Nigeria Brewery. They buy Nestle. They buy Guinness. They will buy PZ. They will buy Unilever. Why? Because they know that they have their people in there that are running the company well.
But do you know that Jack Campbell just came?
Okay.
Because of artists.
Okay.
I know artists are the ones that own Diamond Bank.
I think they will divide from Diamond. Are they still there?
They are owners of Diamond Bank.
Are they still there?
Yes, they didn't go out.
I thought
That's why Diamond Bank was able to buy a UK bank.
Okay. That's why we are saying now. I'm coming over. We are coming over to that one. We think we can hold on. I have list of stocks and the unit of institutional investor in those stocks to give to you guys in this class, so that when you go home you can see like, oh, this is part of that I'm getting. Like, you know that this stock, oh, even though the price is falling, you know that when things get right in the market, the price will go up. You now hold them, or you can sell off. As you said, don't hold it stock like it's falling. Like you don't catch a falling knife. When the stock is falling, depending I don't enter such stock, all I need to cut my loss. Let it go to a level that I know that I can come by. Like the white people, they said they make profit when market is going down. How do they make when market is going down? When they sell up there, they come and buy that. The difference is there is also a profit. Why must you wait until it's because we are thinking long? It will fall from 4 naira to 50 kobo. We are still waiting. If you have sold at 3 naira, you have made profit. If you are selling at what? At 50 kobo, you are making loss already. Then it's better you know how to manage your float. Then which industry